Anyways, it's Friday. I just wanted to check in. I've been busy. I'm jumping around to quite a few properties. I think we have. Are we getting that one video going out today or not, son? No, I guess I don't have. We have a short came out, but not a full length. We have a little bigger video coming out probably tomorrow or probably Monday now. Anyways, just on the house that I just bought a week ago. You know, in a week's time, I've already painted it. The tile floor has been completely pulled up. We have half the new PVC floor, and shut up some crown, and we should be on the market. It'll be like basically a 1 week flip, you know, maybe 10-day, and already got some interest. Hey, Russ, it was nice to hear from you. It was funny, your brother sounded just like yourself. A lot of good things going. I just got off the phone with one of my students, Liam. You know, and this kind of goes to this whole crash bros and doomers thing. You know, look, if you're just getting here for the first time, I've got a book, Wake Up and Smell the Real Estate. I thought I was going to show it to you, but we'll see, maybe not. Let's see. I guess I am not going to be able to do that. Anyways, I've got a book, Wake Up and Smell the Real Estate. It's been a bestseller on Amazon, Audible, and Kindle. You can see it up on the screen there. I urge you to get a copy of that. If you're a first-timer here, please hit that subscribe button, hit that like button, and go to the site. Go to the site here and check out and see all the people in here that made so much money in a very short time. Really smart people like Russ, who's in here, Liam, who just called me, buying a third property. He just closed one. Made probably $200,000 or $300,000 on, and he's got another one he's in the middle of going to do the same, and he's already got another one going into contract that he's going to buy, which is completely different than what these crash bro guys like to talk to you about. You know, I had just done a video here yesterday. You guys know Michael Zuber. We did a little video here. You have to take a look at it. Urge you to watch it.
All right.
Anyways, you know, Michael had made a comment on, you know, basically arguing with the crash bros. I guess, you know, he doesn't like the doomers. He's an optimist. The doomers, of course, you get a lot of play because they're not. And I just consider myself a realist. I'm an investor. I look at my market that's immediately around me. I have to look at, you know, some national things, you know, Fed rates and that sort of thing. But for the most part, you know, I'm an investor that, you know, look, I bought one house last week, right? And I bought 3 in the previous 6 months. And I'll make 100 to 150 on each and every one of those homes. So, you know, good times, bad times, whatever you consider these times, it doesn't matter. You know, there's Jeremiah Babe. He's another guy. He seems like he's kind of a doom and gloomer. You know, it's about to get real. I think he's a little broader than that, I think. But I don't know him that well. But you know, I see a lot of, you know, like sad reality. See some sad reality, and everything's kind of like everything's going to hell, right? And listen, things are going to hell in a lot of ways, but it doesn't mean you can't make money. And like I was telling Zuber in this interview, and I urge you to watch this. Go to one rental at a time, and you can see this. Oh, if I can get rid of my book, I'll get my book off of here. Take that off of Michael's face. Yeah, where is that? Here, I'll get rid of that book photo. But you know, basically what I was talking to Michael about is he had cited 18 years out of the 54 years where there was a downturn, or where property values property sales were down. You know, it was a very, very low demand market, and the prices kind of remained the same. And you know, he was arguing with Crash Bros about, you know, that, you know, generally when things are down, when demand is down, prices go down, which I agree with. And he was arguing with him. But he made his point in as much as he found 18 years over the last 54 years, and we get into that. But I showed him that he kind of cherry picked those 18 years. And you know, I like Michael; he's a real investor. But you know, he found 18 years where the interest rates were dropping down from a high of 16. They were dropping, and of course, while that was going on, and I got another little graph here I drew. You can see, if you see in here, I pulled up this chart, and you can see in 1982, interest rates were 16%. He was put in an area from 1978 to present, which 1978 they were like 9.6. So they went from 9.6, jumped up in 82 to 16, and then they went down over the next 14 years or something like that, down to 7.8. Well, while they were going down, and I drew this line in here, the demand was staying low, but the only reason the demand didn't get lower, and also during this time the prices continued to go up a little bit. But what was saving this, and this is what I pointed out to Michael, is the only reason that this was happening then is because the interest rates was dropping all that during that time. We're not in that situation now. We're in a situation where, this 0.5% they just dropped, don't get excited about that. That's politics. That's a political favor. That opposes exactly what Powell said he'd do. He said he wouldn't drop that rate until he hit 2% inflation, and he lied. He just lied, and that's common, right? And that's the problem. And this is why I don't like to do a lot of predicting, because you can't control what the government will do. They will do the stupidest things, selfish, most self-serving things, and to hell with everybody else. Zeffel wrote, there are always downturns and upturns in the market. I'd say we're going into a big recession, but we'll see. Now, but here, and again, even what you're saying, I can't say that I agree with that. And I've been through some huge recessions, and I talked about that. When I started in real estate in 1981, all through the 80s or later in the 80s, like 85 and up, everything was going back to the bank, especially in Texas and different places. But Texas was really getting hit particularly hard. I mean, you'd see buildings that cost $16 million that you could buy for $3 million. You'd see, houses that were, $500,000 you could buy for $100,000. I remember a fourplex for $28,000. A fourplex for $28,000. And that wasn't even a good enough deal. I got a little piece of that action. I bought an apartment building for $340,000 that was, 58 units, right? It was a lot of property. And I made millions of dollars on that property. And I made millions on other properties around it that were unrelated to the RTC. That one was one that actually went back to the bank. But I can tell you, I can show you properties that I could have got for $400,000 that today are worth over $10-12 million. I could show you a piece of land, 160 acres, I think, for $160,000. Had a house, it's probably worth $17-18 million now. And I think it's partially covered with land. But again, you can make money in any market. But going back to this, what I was just briefly talking about, in this scenario that Michael had pulled that, and this is why I kind of challenged him on it, and we don't have the same scenario. And if we were in the same scenario, then you definitely would have seen the values going down with demand. I've seen it before. It's kind of what happens. But the interest rate is what was saving it at that time. Let's get over here. So back to the doomers. Bordenaro, he's kind of a doomer, and I'm not even saying this in a negative way. But the headlines speak for itself. Look at this: trillion stolen. Not going as planned. Wall Street is worried. They are robbing you. This is how it starts. How can they do this? In other words, none of it sounds positive. None of it sounds optimistic. And but people love bad news. It's just kind of how it is, right? I just think in general, the saying, good news travels slower than bad. And so no matter, you can be somebody that does a really good job, and that will help your reputation and do well, but you will ruin your reputation with just one bad job, one bad experience, and that will be it. Tom, can you do an interview with Mr. Allen, real estate? I don't know who that is, but I'd be happy to. I'm game to do it with anybody. I just, anybody, I just, like I say, I say what's on my mind and talk straight. But I don't know who that is, Russ, but I'd be happy to look at him. Mr. Allen, can I find him on YouTube? Let's look over here. Tell me what you guys think. What do you know about Bordenaro, Reventure? He's got a hell of a following. Again, seems too young to have any real estate chops, know much about what he's doing. Doesn't mean he can't read charts and read articles and form his opinions. I don't, I don't ever see him talking about a portfolio and money made in real estate. So I don't know that you want to take, advice from somebody that just simply sees the doom and gloom. There's money with doom and gloom. There's a lot of money with downturns and things that go down. Hey, Keith, good to see you. Grant, good to see you, buddy. So let's look up Mr. Allen. Mr. Allen Real Estate, okay? Is this it? I don't know. There's a few Allens. You have to. Yes, he's on YouTube. But is that what it's called? Mr. Allen Real Estate? We're going to find somebody new here to look at, guys. People watching. Yeah, Mr. Allen. I got Mr. Allen Real Estate. But oh yeah. No, I see Mr. Allen Kendall, but I don't see exactly what you're referring to, bud. But what do you guys want to do? You want to watch a video? Give me his full name, Russ, his last name. That would be helpful, if you can. But we can, look, we can watch a Bordonaro. We can watch anything you guys want to watch. Just tell me if there's something out there. Another one I've seen is Nate Barger. The one with the graphs. Okay, let's go back to the one with the graphs. Oh, okay, right here. Okay. Worst and safest times to own real estate. That's 2 years ago. Will higher rates crash real estate prices? That's only 2 minutes and 24. Let's go ahead and watch this one. Which one you want to watch? You want to watch this first one? Feedback from the crowd. He's got one here. Will higher rates crash real estate prices in 22, 23? Seems, that's 2 years ago. I think maybe we can find something more recent. Let's look at. All right, Mr. Allen Kendall. That's who this is. Videos, see if he's got anything recent. Wow, the most recent thing is 2 years old. Lorraine's game for Kendall. All right, we'll do this one here. But his most recent video. Let's watch a couple of these. Yeah, let's watch a couple. Okay, we'll start with this one.
Welcome back. This is Mr. Allen Kendall. Will higher rates crash real estate prices in 2022, 2023? Well, higher rates and high gasoline prices will definitely stall the economy, and we'll definitely go into a recession 2022, 2023. But real estate will continue on its trek up because we're so underbuilt. The inflation of the 1970s, my cousin bought a home with a 21% variable loan. And the recession of the aerospace recession of the night.
All right. So what he just said, I don't know that I really agree with that. Let's go back and hear that again.
And the recession of the aerospace recession of the 1990s and the subprime loan crisis, they raised rates and it crashed real estate. But that's not going to happen right now in 2022, 2023, because we're so underbuilt.
So listen, I don't agree with that. I'll just say right now, just because we're underbuilt, it doesn't mean we're going to build, right? In other words, you got to have money. You got to have money. You got to have jobs. Listen, hopefully we'll get a new administration in here and we'll be drill, baby, drill. We'll take an oil out of our own ground, and we'll be, we'll make the money here. And we'll just try to do as much as we can in the country. And that will help. But otherwise, if we keep the current administration, then what we're looking at is government jobs, meaning buy your way out of a recession. And, you can't just tax people to create jobs. And just thinking, creating all these new green jobs, all these government jobs. Every time you create a government job, somebody works 30 years and they retire for 20. They're on the government dole for the next 50 years. And we're already broke, so it doesn't make any sense. But let's keep watching this one.
So even raising rates will not slow down the run-up in prices. So we have an 8.5% published inflation in 2022. Rates have to go much higher in order to slow down the real estate rise.
Yeah, so that hasn't really been the case, but you can comment, Russ or anybody else. The interest rates have jumped up. I've seen absolutely things stall to a great deal. People are, I mean, there's always going to be some transactions going on, but I've seen prices fall. I'm not paying as much for property today as I would have 2 years ago or a year ago. And I've been much more conservative, and I'm getting away with it. And like I say, I bought 4 houses in the last 6 months, all of them about 100,000 under market or more. But let's keep watching.
Closer to 8.5%. But that's not happening, especially in a mid-election year. They don't raise rates that much. When rates were the highest in the 1970s, demand was the greatest. Real estate is the best inflationary hedge. And
yeah, so I don't know. I would, we've got the 54 chart, but what did he just said? The lowest rates in 50 years. When rates were the highest in the 70s, demand was even greater. And real estate is the best inflationary hedge. Now, I agree with that point. But I was alive in the 70s. I was a kid in the 70s. I was a broke kid, powdered milk. At times, my parents were in and out of work, in aircraft, got hand-me-down clothes, got free lunch at school. Life was not a great time. And inflation was extremely high. And, I think they were trying to counter it with the higher rates. And when the rates started coming, it's the rates when rates started coming down, there was time for it to adjust, right? I can tell you one of the things I feel strongly about is this sudden jump in interest rates, 3.5% to 4% in the last two years, say, that is a lot. That is a huge jump in a very short amount of time. And you got to remember, I come from rates, 12% when I first got into real estate. Things were 12% in the 80s, or in the early 80s, beginning of 78, 79. I mean, 80, let me put it this way, I just looked at the chart. 82, the interest rate was 16.9%, I think. So that's when I was actively investing. So I got a great deal. I got a property with a 10% interest rate in 1981. But that little spike that happened in 82 that went to 16, prior to that, like in 78, it was 12. So really, I don't even want to count that little spike up. For whatever reason that happened, very up and back down. But in general, things went from 12% and slowly went down to like 7% over the next 18 years. And it was a gradual drop, but everything was becoming more affordable, right? In other words, you could buy a house for $60,000 today, and let's just say your payment would have been, I don't know, $700-800 a month, which would be a lot back then. But then by the end of the year, maybe it was only $500 a month or $550 a month because the interest rate had dropped enough. So it was becoming more and more affordable. From 1979 to 1996, and but like I say, you got to just look at everything that's going on at the same time. But interest rates is always huge, and demand isn't enough. And like I say, demand. He's saying this is what I was arguing with Mike. Just because demand is low, there's other factors that are gonna adjust whether the prices go up. The demand, when demand is low, generally prices go down because you start competing for you're competing for buyers. It becomes a buyer's market, and so you're trying to find a buyer. So how do you entice a buyer? You lower the price. That's really all you can do is make it more affordable. And so, and that's what happens. We start bidding against each other as an investor that's selling properties, bidding against other people, and that's the game. And then same thing when interest rates go low and it becomes more affordable, and all of a sudden everybody's buying because they can afford more, and the economy's good. Then again, the prices go up because the interest rate goes down. So, anyways, let's watch the other half of this.
One of the reasons why you want to hold on to real estate in 2022, 2023 is because we still have the lowest rates in 50 years. We have a very short inventory because we're very underbuilt after the 11-year recession.
So I'll go along with that. I agree with that. I mean, if you got a low rate, anything under 5, 6, that's a low rate. So especially if you got 2.75 or 3, it really makes sense just to sit still.
and building from 2007 through 2017 as they sold off foreclosures. We have renewed inflation, which is great for real estate, which is considered the number one inflationary hedge. And immigration might push up the construction peak of around 2027, 2028 up a few more years. It takes 2 years to slow inflation when the government starts spending less, and the government hasn't started spending less, so inflation will continue for years. That means real estate is going to be a great investment over the next few years. Many cities in the United States are going to double in price, even in...
Yeah, so real estate's a great investment, but what's you can't deal with is having to borrow money at, commercial property right now on average, say 8%. It doesn't pencil. This is why you look at Ben Mala. Ben Mala's got 250, we were talking about this the other day, he's got $250 million in debt. He was on Graham's stuff the other day. He's going to sell off all of his stuff. And why? Because his overhead went up $500,000 a month, okay, about $6 million a year. So that tells me that about $150 million of his $250 million in debt was probably, variable and went up about 4%. And so he's got that $6 million a year eating him that he didn't have eating him previously. Well, so now what? We just had a 0.5% drop. That's a substantial drop. Wow, 0.5%, right? Well, the problem is we've had a 0.5% go up, I think, 8 times, right? We've gone up almost 4% over the last 2.5, 3 years. So a 0.5% drop is nothing. It's nothing. And we still have inflation over 2%. And so, this is why it kind of goes against some of what this guy's saying, that you still have to borrow money to buy something. And so, anyways, let's watch a little bit more.
In areas that are very high, like California, many cities might go up 50%. Okay, so that's great appreciation. We'll definitely have a recession.
The high rates, the high interest rates are killing prices. So he did this way early, and I think he's way off in this particular line.
But real estate will continue on its trek up. There'll be a big rotation of money out of other investments and into real estate. Have a nice day. Bye-bye.
So that's interesting. Let's watch another one of this guy's thing. We can talk about it, you guys. Online income, said you just got my book. That's great, buddy. I appreciate that. JM wrote, what happens if Trump loses the election? Well, it would be, I think overall it'd be terrible for the country, because Kamala's idea of creating jobs is government spending. And, well, whose money is that? That's ours, right? And then here's the worst part. We've had somewhere between 15 and 20 million illegal aliens coming into our country. 330,000 of them are from China, okay? And another 300,000, I think, are from Haiti. In other words, we have all these people that couldn't pass customs, couldn't come into our country direct. They're coming through Mexico. And so, and everybody knows, get an Obama, or get the Biden app and that sort of thing, and, get all kinds of government money thrown at you. That's costing us. It's killing us. And then we got all these shelters and stuff that are packed now from people from other countries. So it's making it harder to take care of our own vets and things like that. So, but back to your question. So if all that's happened right now, if Trump loses, then it's kind of like a mandate for Kamala to say, okay, hey, I got reelected. They want me to keep doing the same shit we've done for the last 3.5 years. So it's just going to be much, 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 much worse. And so you got to understand, politicians in general are like, they don't have money. Many of them, and they're the most corruptible, but they get very rich by not even being that particularly bright while they're in office. And so I'm somebody that actually likes rich people running for office because they can't be bought. I do believe that. It's like me. Look, I'm in here. I have a course. I can take advantage. I can sell people. I can blow smoke up people's asses. But I tell people exactly how it is. I don't let anybody in my class, unless they have enough money to pay cash for my mentoring, plus have cash in the bank to invest. If you don't have cash in the bank to invest, or if you have money in the bank to invest, and you don't know how to invest it, you need to invest in finding out how to, and you need to check the credibility of whoever's teaching you. I got great, fantastic credibility, and I got amazing students, and some of them are in here right now. A lot of them are in here right now, actually. And so that's important to somebody out there, buyer beware. But, and like I say, Russ brought this guy up, and it's very interesting. Take a look at these other lines in here. Tell me which other one you'd like to take a look at. This one says the top 3 reasons to buy real estate in 2022, which I think he's going to piggyback on what he just said, which I disagree with, and I think it's wrong. But Trump 2024. But yeah, no, Trump. Back to your question, by the way, and JM, if Trump gets in again, it's jobs. It's jobs. I thought we were going I thought we were going to crash when Trump got in before, but surprisingly, he brought a lot of faith and confidence to business. But he also did a lot of things that supported business. We had that Obamacare was killing a lot of it. I was paying on average about $1,200 a head for insurance for only the 7 people that I insured. I guess I was getting a little bit of break on the kids, about half that. But I was spending $60,000, $70,000 a year for insurance. It was like cancer insurance. It really didn't help. It didn't do shit for me. And I remember hearing a young person, I was in Breckenridge skiing, a nice little resort I go to, and I heard this bartender, a young woman about 26 years old probably, and somebody was talking to her, and she said, yeah, this fucking Obamacare. She was really pissed because she was forced into paying for health care that she didn't want and she didn't need. Listen, if you're young, you're probably not going to break down. You're not going to get sick. I've hardly been sick at all in my entire life. I cut my thumb off once, but again, I paid for it. But like I say, Trump got in and says, look, you don't have to do that. Sure, we got to take care of people if they're sick. We got to do that, but we don't have to take care of everybody. So, where other people can. I like private insurance. Let me put it that way. Do you have any economic theories or theorists or professors' ideas you subscribe to? No, not really. I watch... I listen to kind of everybody, and for me, it's, I like watching. I'm not big on watching the article readers and that sort of thing. There's certain people that speak. I like Warren Buffett. Warren Buffett is for a stock guy. He invests like I do, but he's not a real estate guy. But he likes tangible products. He buys companies that make things. See's Candy, Mauser Electronics. That kind of reasoning. Those people got a sweet tooth, a great reputation. You buy a company, people consume it. Makes sense, right? And I treat my tenants like customers. So same thing. I tell my students, treat your tenants like customers. You'll have them forever. But yeah. So let's see. Like I say, but all this doom and gloom stuff you see here, Bordner, I don't even know what the point is. Let's talk about how fucked up and terrible things are. I mean, it's some interesting stuff. Yeah, Bordner was talking about the condos, all the HOAs in the condos. There is some news. There is some newsworthy stuff. Not knocking it totally, but the emphasis is on everything that's bad, and so that's what sells. But I remember when I interviewed Ben Mala in my class actually, and great guy, smart guy. He's been around. And the question I asked him, I said, they just had that condo collapse in Florida, right? Where just all of a sudden thing went down, killed a bunch of people. And and he has some properties that are, along the water. And I said, how'd that, affect you? And he says, wow, geez, he goes, don't even like to think about it. Because you're subject to a lot more scrutiny now, right? In fact, what's hurting the HOAs, and I actually heard this on a Board and Arrow video, what's hurting the HOAs is they have to test, they have to make sure the building's not going to fall down. So everybody's got this huge HOA fee to pay for, to make sure that the place isn't going to break. And now it's hurting their values because they're trying to sell the place. And it's like, yeah, you can sell my place, but my HOA fee went from $150 to, $420 a month. And that's real money. Plus, don't forget, the money to borrow to buy the place costs twice as much. And that's what people really need to understand. When people say, can you afford it? Like, if you ask somebody, well, can you afford to buy that place? Can you afford to buy this place? Or if you're, people, even if they're asking about a car, they don't usually mean is how much is it? They mean how much a month? How much a month is it? Now, it's sad, and that's how it is. And look, I was in those shoes before, but when I say how much is something, I want to know how much the property is. And whatever I think it's worth, meaning whatever I think somebody can afford to borrow money for and buy it with 25% down. I'm putting myself in that person's shoes because that's who I'm going to sell it to. I'm going to pay cash, but I need to get a substantial figure below what is affordable to the open public. And so that's why, number one, you got to know value and you got to buy under market, but you got to understand that things change. I pay less for a property today than I did a year and a half ago. So that would fly in the face of the guy that we just watched who was saying, oh, values are going to just keep going up. That's bullshit. So Virgil Road, hey y'all, Liam, yeah, okay, yeah. This is becoming a political one. That's awesome. Anyways, but look at say, you've heard Kamala talk. Everything is stupid platitudes. No, just everything is like, I'm going to create an opportunity. And everybody say, how are you going to do that? By, investing in opportunity. It's just word salad, as they say. So it's pretty sad, but it is where we're at. So let's go back to this guy. Where is he? Right here. And let's look at Leverage Explained. How long ago? I can't even see how long. Oh, 2 minutes and 31. Let's go ahead and watch this. This sounds good.
Okay, inflation affects housing prices. I have here, I put $22,000 down to buy a $236,000 home at the beginning of 2012. And I had a $225,000 loan because I put $11,000 down. Of this $22,000, 11 was down and 11,000 was closing costs. So we have here the equity is 11,000. I owe 225,000 and the value is worth 236. So I have an 11,000 in equity. And of course now I've lost $11,000. If I were to turn right around and sell the property and pay another 11,000 in closing costs, I would completely lose my $22,000. But after a year, the property been going up an average of $40,000 a year. And so after a year, I have 51,000 compared.
Okay, so and this is probably why he's so excited for the future on that other part, which I disagree with. But what he is right about this is that you buy a property and you get you buy a property for $20,000 under market. It's worth $400,000. Listen, you're going to spend $20,000 as soon as you put it back on the market, right? You're going to spend 5, maybe 6% to sell it to somebody else. In other words, you're not going to make any money. That's why everything I buy and everything my students buy, we're talking 35% margins. You have to, even if it's a smaller property, you even have greater margins. When I buy properties under $100,000, I'm usually getting them for 50 cents on the dollar, sometimes 40 cents on the dollar. Because you have to, because the expenses per the size of the property are greater the smaller the number. But as you get bigger, then you can maybe, you can fudge it a little bit. But again, he's using an example where he's saying, prices are going up 40% a year. That's 20% on $225,000. That is not the norm. But I think if you want to try to use a longer term average, I think maybe 6 to 8% a year is probably not, it's probably about an average. If you took a long span and went over it, you'd see it go up, about 8% a year. Now, listen, property goes up like a hockey stick, things depressed and the interest rate goes down suddenly. All of a sudden, properties double. Those are great times to take advantage. I've done it myself. And if you guys want to see stuff, I can show you stuff on Google Earth. I can show you properties, just unbelievable stuff. I can show you properties back in the RTC, back in the late 80s, and I got a little piece of this action, but, I saw buildings, 400,000 that were worth 8 million and are worth probably 12 million now. Land that's worth, I got this piece I could have got for 160,000, worth probably 17, 18 million dollars today. So Ziffler, right? I'm very cynical. I'm not sure if that counts as doom and gloom. Depending upon what happens, you can easily upside down on a deal. Well, not really, Zephyr. If you buy a property, if you got to buy, you have to have a heavy margin. I mean, if you got to buy under market, if you don't buy under market, you're just foolish because things can change. I learned this lesson. I bought 80 acres for $4,000 an acre. I think that's right. Yeah, 80 times 4. Yeah, 320,000 for 80 acres. Me and a buddy put 50,000 down each. Within 6 months or a year, it wasn't worth what we owed on it. It wasn't worth what we owed on it. And so I told my buddy, I says, hey, man, listen, there's no sense throwing money at this. You know, we're in a downturn. And this is when I was young. I didn't really, I didn't have as much experience as I do today. But I still had enough sense to say, you know what, let's just give it back. And that's a good thing. There was no bank loan. And this is one of the advantages of owner finance, which you learn about that in my class, by the way, a lot about owner finance. But in other words, you can just hand it back. You don't necessarily have to, you don't have to necessarily go through a foreclosure process. You can literally just deed it back to the owner and be clean. And I've had people deed property back to me that owed me money, and likewise, I've deeded property back, and I've had it deeded back to me. So hang on one second, and I'm going to be right back. You want to learn how to make millions of dollars in real estate? I've made tens of millions over my lifetime, and I'm showing people how to do it. Get in my free webinar. I have it every Thursday, 7 p.m. Central. Go to the link below, flipanythingusa.com/webinar. Sign up for it. You can talk to me face-to-face if you want. Don't waste any time. Hit that subscribe button. Hit that like button. You don't want to miss my channel. I've been doing it for years. All right. Anyways, so I don't know what else you guys want to talk about. Just say it, and we'll do it. Also, if you don't have a copy, there's my book again. And Virgil, yep. It was great talking to you, Liam, by the way. Anyways, so look, if you want to have a conversation with me direct, you are certainly welcome to do that. You can go to flipanythingusa.com. Let me see if I can find that for you. Go here, go to flipanythingusa.com, and right here, just apply for mentorship. See that right there? You can go to the webinar. Urge you to go to Success Stories. If you click on Success Stories, then you'll see all these fantastic success stories. People making hundreds of thousands up to millions of dollars. Jerry here, he just made over $2 million. But on average, I would say most people make about $100,000 on every deal that they do. That's fair to say. But I have many people in here that in the with a couple of years' time have become millionaires. Guys that have never seen. It's safe to say most of the people in my class, after 3.5 years, the ones that have made a real estate transaction, have seen more cash in their hands than they've seen in their whole life. And that can also be for you, and there's just so many fantastic stories. Urge you to go to the success page, watch these videos, very, very inspirational. Land millionaires, Jerry here, he's got about $3.5 million property for $900,000. He'd already made several $100,000 flips before that. And Shane here, he's on his 4th property. He's going to make, he's already made 250 roughly. This will put him over to 350, maybe 400,000. They got a really great deal. $228,000 property. I think he said he got it for 120 or 110. There's just so many of them. There's just so many of them. Really, really, take your time to look. Take your time to look, because there's so many people that you can go to their success page. You can go to a fake guru success page, and there's picture after picture after picture. But if you look deeper, there's nothing there. There's zero there. There's no success. There's no money. The people even say it. I mean, they call somebody saying, hey, I made all my friends here, and I got this stupid hat. It's so ridiculous. But anyhow, and then also you can schedule a call. You can schedule a call with me. Click on one of these, webinar or apply for mentorship, and you'll get sent an email, and you can schedule a call with me direct for free, and I'll talk to you. I'll give you my best advice I can tell you for whatever position you're in. But I can tell you right now, if you haven't bought a house, you're a couple, you haven't bought a house yet, don't get dragged into some stupid investment. make the investment use your own money to buy a piece of real estate that just you yourself or you and your wife, husband and wife own, because that'll be the biggest, best investment you ever made. You get in my mentorship, you'll probably buy something for $50,000 to $100,000 off. It'll pay for the mentorship many times over, but you'll have equity day one. And even if the market even starts to go down, you'll still have plenty of equity, and you'll be able, it'll be your hedge against things coming down if they do come down a little bit. And there's all kinds of opportunities with downturns. It's just unbelievable. Listen, I bought my first property, and I'm not going to make this too long for those that know me, but these are all the properties that I own around me right now. You can see, there's hundreds of thousands of square feet of rentals that I, to this day, that I own. And I've probably gone through, I don't know, 700,000 square feet, maybe even 1 million square feet. I don't even know for sure. But I can tell you what I still hold today. I still own hundreds of thousands, and I make hundreds of thousands of dollars a month in rent. And but when I was started young, this is it. I started right here, little desert town out in California, and man, it's just a fantastic way to make money. There's nothing like it. So I love it. I'm passionate about it, and you should get into it. You really, really should get into it. But where to start is get the book, get into a webinar, and I'll send you a recorded webinar. I'm not even sure I'm going to be doing the live ones anymore. I think I'm going to do live seminars in the future, but I will have a call with each of you individually because I hate to see you lose your ass on something. Nick P. said, with birth rates dropping, could U.S. become like Japan with house prices depreciating? I don't concern myself with that stuff, to be honest, Nick. The birth rate and the different thing, everybody, listen, let me tell you what I worry about. Interest rates, and if everybody's working around me, a 60-mile circle. That's all I need to worry about is interest rates and a 60-mile circle around me. That's all I need to know. Is their business is booming? Is there people working? Are they building homes or not? Is there high-tech folks here? Is there a big plant that's going to go under? And then, we're going to lose, is there Air Force Base that's going to close? It'll devastate this town. These are the kinds of things, it's all over. So I can't say I wouldn't even begin to speak on that. But the question you wrote was, with birth rates dropping, could the USA become like Japan with house prices depreciating? No clue. Not my subject. But making money in real estate is. So, hey, thanks for watching, everybody. And again, please hit that subscribe button. Hit that. Let's see, I can't even find my subscribe button. Something's wrong here. Well, you'll just have to imagine it popping up saying like and subscribe. But I appreciate it if you would hit subscribe and comment. There you go. Yeah, there's one right here. But do that and comment and talk about anything you want. You can talk to me personally. Like I say, I am accessible, and there, I'm open book. You can ask me a question. If I don't know the answer, I'll tell you I don't know the answer. I don't need to pretend. I do very well at what I do know. So thanks for watching, everyone, and let's do it again sometime soon. And again, the things are not working well. Let's see. Here we go.